Greetings, fellow financial adventurers. Welcome to our channel SnapSavings, your fortress of financial wisdom.
In finance. From individual investors to multinational corporations and even governments, everyone is paying close attention. This broad spectrum of interest has propelled cryptocurrencies from a niche digital curiosity to a major economic force globally. This meteoric rise prompts a critical question: what exactly is driving the world towards cryptocurrencies? At the heart of every cryptocurrency lies a revolutionary technology known as blockchain. Imagine blockchain as an immense digital ledger, somewhat akin to a giant spreadsheet that's accessible to everyone, but is maintained collectively by its users, rather than a central authority. This ledger continuously updates and records every transaction that occurs across its network in blocks. Each block contains a number of transactions, and once full, is permanently sealed and linked to the preceding block. This chain of blocks is what we call a blockchain. Now, why is this important? Well, because it's nearly tamper-proof. Each block is secured using a cryptographic technique called hashing, which ensures that once a block is added to the chain, altering it retroactively becomes virtually impossible without detection. The decentralized nature of blockchain is its true marvel. Instead of relying on a single central entity, like a bank or government, blockchain distributes the responsibility of maintaining and validating the ledger across a vast network of computers. This means that to alter any information on the blockchain, one would need to gain control of the majority of these computers simultaneously, a task so Herculean it borders on the impossible. This structure not only secures the data but also enhances transparency. Since every transaction is recorded and visible to anyone on the network, everyone can see what's happening, but no single person or group can have control over the entire system. Thus, blockchain isn't just the backbone of cryptocurrencies, it's a new way of sharing and securing data. Now let's decode what cryptocurrency actually is. Imagine a type of money that exists purely in the digital realm, using complex code to secure transactions. This is cryptocurrency, a digital or virtual form of currency that uses cryptography for security, making it incredibly difficult to counterfeit. Some of the most well-known cryptocurrencies include Bitcoin, Ethereum, and Ripple, each with its unique features and uses. Cryptocurrencies aren't created out of thin air. They are mined through a process involving powerful computers solving complex mathematical problems. Once solved, the miner is rewarded with a fixed amount of the cryptocurrency. The value of cryptocurrencies is driven by supply and demand in the market. Unlike traditional money, most cryptocurrencies have a cap on the amount that can be in circulation, making them potentially more resistant to inflation. So cryptocurrency is not just digital money, it's a technological breakthrough that challenges traditional financial systems. Investing in cryptocurrency can be highly enticing, and here's why. Imagine a scenario where the potential for high returns is not just a possibility, but a reality for many. Cryptocurrencies have been known to experience rapid and significant increases in value. Take Bitcoin, for example, which saw its value skyrocket from mere cents to tens of thousands of dollars over a decade. While past performance is not indicative of future results, the potential for substantial gains remains a powerful draw for investors. Now consider the liquidity of cryptocurrencies. Unlike real estate, which can take months to sell, cryptocurrencies can be traded almost instantaneously on various exchanges around the globe. This ease of trading allows investors to react quickly to market changes, providing a flexibility that is hard to find in more traditional investments. Furthermore, the decentralized nature of cryptocurrencies offers a unique advantage. By using blockchain technology, cryptocurrencies operate independently of a central authority. This means that investors have more control over their investments. They can transact without the need for intermediaries such as banks, which often impose hefty fees and may delay transactions. This autonomy not only enhances security but also empowers the investor with more direct control over their financial dealings. Additionally, the increasing acceptance of cryptocurrencies as a valid payment method worldwide further enhances their appeal. Major companies across various industries are now recognizing and integrating cryptocurrencies as a part of their payment systems. This growing acceptance not only bolsters the legitimacy of crypto, but also expands the potential for its everyday use, thereby increasing its value as both a currency and an investment. Clearly, the allure of cryptocurrencies is strong, but like any investment, there are risks involved. However, where there is potential, there is also risk. delving into the world of cryptocurrency, it's crucial to understand that the very factors that create opportunities for immense gains also pave the way for considerable risks. Perhaps the most notorious of these is the volatility of cryptocurrency prices. Unlike traditional stocks and bonds, cryptocurrencies can experience wild swings in value over remarkably short periods. This volatility can be fueled by everything from global economic news to tweets from influential figures, making it a high-stakes environment for investors. Moving on, another significant concern is the risk of hacking and fraud. Cryptocurrency transactions are secured by blockchain technology, which is generally robust. However, the platforms and wallets where these digital currencies are stored can be vulnerable. Over the years, there have been numerous instances where hackers have breached these systems, resulting in the loss of millions of dollars worth of cryptocurrency. The decentralized nature of most cryptocurrencies means that recovering these losses can be nearly impossible, leaving investors with empty hands and heavy hearts. Furthermore, the lack of comprehensive regulation in the cryptocurrency market presents another layer of uncertainty. While this can mean fewer barriers and restrictions, it also leaves investors with limited recourse in cases of fraud or market manipulation. The regulatory landscape is also subject to change as governments and financial institutions try to catch up with the technology, which can introduce additional instability and risk. Lastly, the potential for significant losses is an unavoidable aspect of cryptocurrency investment. The same volatility that can lead to rapid gains can also result in equally swift losses. Investors can see the value of their holdings decrease dramatically overnight, and unlike more traditional investments, there are few safeguards in place to prevent large-scale losses. So, while the rewards can be great, the risks are equally significant. Given the pros and cons, how should one approach investing in cryptocurrencies? Embarking on the cryptocurrency investment journey begins with a cornerstone of thorough research. It's crucial to delve into the intricacies of each cryptocurrency, understanding not just its market trends, but also its underlying technology and real-world applications. This foundational knowledge helps in making informed decisions. Next, assess personal risk tolerance. Cryptocurrency markets are known for their volatility. They can offer exhilarating highs but are equally prone to daunting lows. Reflecting on one's comfort with potential losses is key to determining how much to invest without losing sleep. Diversification is another strategic approach. Don't put all eggs in one basket. Consider spreading investments across different cryptocurrencies and other asset classes. This can mitigate risk and provide a safety net when one part of the portfolio underperforms. Staying updated with market trends and news is equally vital. The world of cryptocurrency evolves at a breakneck pace. Regulatory news, technological advancements, and market sentiment can drastically affect prices. Regularly engaging with reputable news sources and analyses can provide critical insights and timely opportunities for action. Finally, the importance of security cannot be overstressed. Use reputable exchanges and wallets to safeguard investments. Ensure that these platforms are not only user-friendly, but also equipped with robust security measures to prevent unauthorized access and potential losses. Invest wisely, and remember, knowledge is your best investment in the volatile world of cryptocurrency. To invest or not to invest in cryptocurrency? That is the question we've explored today. We began our journey by climbing the steep slopes of blockchain technology, discovering its power to revolutionize transactions through decentralization and transparency. This foundational technology not only supports cryptocurrencies, but also has potential applications spanning from finance to healthcare. Then, we dove into the essence of cryptocurrency itself, a digital or virtual form of currency secured by cryptography. It's a concept that's both revolutionary and challenging, offering a new way of thinking about money. We weighed the pros of investing in cryptocurrency, highlighting its potential for high returns. The allure of being part of a technological frontier can be quite compelling. Innovations like Bitcoin and Ethereum have shown that cryptocurrencies can not only grow in value, but also influence the global financial landscape. However, every coin has two sides. We also navigated through the cons, discussing the volatility, regulatory uncertainties, and the risks associated with digital currencies. These factors make the cryptocurrency market a roller coaster ride of highs and lows, requiring a sturdy heart and a keen eye. As we approach the end of our exploration, it's crucial to remember that investment decisions should not be taken lightly. Whether you're a seasoned investor or a curious newcomer, the importance of doing your own research cannot be overstated. Understand the technology, keep abreast of market trends, and critically evaluate how it aligns with your financial goals. Thank you for joining me on this exploration of cryptocurrencies. Dive deeper, stay curious, and make informed decisions before you invest.
Don't forget to like, share, and subscribe for more profound insights into mastering your financial journey.